let us begin with these debt and deficit ceiling talks in Washington. How realistic and how worried are you that there could be an accident and a technical default?
I trust it won't happen. It would be financial Armageddon if it did. Quite likely it would make the events after Lehman Brothers failed look like a picnic. It's not something that any rational individual would contemplate permitting. And I believe that while there may be some drama along the way, that we will not see a default. That's something that is so horrible that it would be beyond my imagination.
The nature of deficit reduction talks, and you've been through more than your fair share, is it always goes to the wire. But this time, with an election next year, Republicans, do forgive me, we've got obviously more stun grenades going off here in Athens, with the Republicans refusing tax rises, Democrats on spending cuts. Where do you think this is going to fall out, Mr. Summers?
Look, it's not just deficit talks. All negotiations tend not to get resolved until the last hour, and everybody's tried to get as much of their position as they could. And in that context, my expectation would be that some kind of compromise will be reached. There'll be some strategically designed cuts in domestic spending. There's likely to be some cuts taken in defense spending as well, which has been a priority for the Democrats. There'll be some resolution on tax policy questions. No one wants to signal in advance the concessions they're prepared to make, because that means making them. But I think you will see a compromise in the end, and like all compromises, no one's going to like it very much. They're just going to like it relative to the alternatives.
All right. Turn our attention to, and pull the strands together for me. We've had Greece. Everybody was terrified of a debt default and the contagion effect that would affect the United States, perhaps. Do you believe tonight that that contagion effect has been lessened, and are you more optimistic the U.S. won't feel any effects?
I think the Greece situation has been contained for the moment, not resolved. Ultimately, a resolution is going to depend upon Greece's ability to carry through on what is a very, very difficult program economically, and as the scene behind you demonstrates, an enormously difficult program in a democracy with citizens with strong entrenched interests. It's going to depend in Greece on how the financial playout is, how those with funds in Greece's banks respond to the uncertainties that surround the Greek government and also surround the prospects for the program and the prospects for continued support from Europe. So I would say we have bought time, but this situation as an issue is with us and is likely to pose a recurrent challenge in coming months.
Right. Finally, to pull the strands together, if we may, we've got Europe, sclerotic growth, and a periphery that is in deep financial trouble. The United States has deficit issues, and it also has growth questions and inflation worries. Where do you think the biggest risk now lies?
I think obviously from the point of view of the global system as a whole, what's happening in Asia is profoundly important. China is now the second largest economy in the world. China's growth is the largest single contributor to global GDP growth by a significant margin, given its scale and the rapidity of the growth rate. So what happens in China in particular and in Asia in general is going to be central for the global economy. And obviously we have a stake not just in their success, but in their success being based on a model that emphasizes domestic demand rather than exporting to our markets.
Larry Summers, thank you so much for joining us and putting all this into some perspective for us. And please do come back again to Quest Means Business when hopefully it won't be quite so noisy with the stun guns and grenades of Athens. The former US Treasury Secretary, Larry Summers, joining us there.